All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today what we're going to be talking about is a bunch of different stocks pertaining to my portfolio. Today is all about talking about my portfolios. I have two different portfolios. One I call my real life portfolio. The other one is my Questrade portfolio. And today what I want to talk about is some of the stocks where I have a little bit more money invested. So we want to talk about some of my higher invested stocks being Yieldmax. We also have Clip. I know you guys wanted to see a video on Clip, so I want to pertain to Clip in this video. I also want to talk a little bit about some of my other big holdings and positions, where I see them in the future, and why my investing accounts are actually doing quite well currently, even though it seems like they've been remaining relatively flat. I want to get into all that because we invest for some high yields on this channel, and we have relatively small amounts of money that we're working with. So this just goes to show how you can generate a lot of money with a smaller account balance, and I want to explain that in this video. So we're currently up to 5,280 subscribers. Got a message from Ethan Galstad. He is another YouTuber, but I don't know if that was a personal message. That was probably a spam message or something like that, but we're getting into this video nonetheless. So today, let's get into it. So my current portfolio balance is sitting at about $8,611 for my real life portfolio, which holds stocks such as Clip, TSLA, MPW, ZIM, SQY. These are some high yield dividend funds. You can see yields as high as 72% from TSLA. I'm pretty sure that's the highest one. I don't hold too much Yieldmax in this portfolio, only about $400, $450, something about there. But the reason why I want to talk about this is because, for example, Yieldmax is my biggest holding within my Questrade high yield portfolio, and it currently pays me about $100 in monthly income. You can see that here. And what I'm currently doing is investing a majority of my income to build up this new Yieldmax portfolio. And the reason being, Yieldmax I view as the most stable Yieldmax fund. It holds a portion of each individual Yieldmax fund, which pertains to TSLA, SQY, which are some examples, and I do believe it is the best kind of bang for my buck at the current moment. I will not be reinvesting into SPXS, which is the kind of 3 times bear on the S&P 500, just because it is completely outweighing any gains from Yieldmax, which is to be expected. That was kind of the strategy here, to avoid any kind of disruptions in the capital appreciation or depreciation. But with Yieldmax doing so well, I do want to invest more in that and just look to hold SPXS. Now, moving on to Clip. I want to talk a little bit about Clip because in the past 6 months, it has been performing okay. It's kind of held its position, but then took a steep dive down, roughly about May 20th, down to June 28th. So a month it was completely going down, but you can see it's picked up here from about $12.89 all the way up to about $13.50, which is pretty good. But why has Clip been performing like this? It's because the underlying stock KWEB, which is the Chinese internet sector, has gone through a little bit of a boom bust phase. Started out at about $23 or so, drove all the way up to about $32, and is currently trending down a little bit. But in the past month, halfway through the month of July, it's been picking up a little bit of steam for the Chinese internet sector. And one thing is, when we look at the Chinese internet sector as a whole, you can see here, relatively, I'd say throughout history, it generally trends slowly upwards over time, which is exactly what we want to see for Clip, because Clip will take advantage of that slow uptrend and produce a 40% dividend, which it's been producing for the past year and a bit. I've been a holder of Clip, and I'm actually very happy with my holdings of Clip. You can see here I'm down about 30%, but I've been paid out roughly about 40 to 50% in dividends, so I'm up currently on my position with all the money I've received. So overall, it's been a good position. But of course, there's bears in the market. Why big tech may never recover in China. This is kind of like our news article meant to scare off investors, but it kind of talks about what had happened in China over COVID and how it pertains to Clip, because Clip is invested in the Chinese internet sector, basically saying how in 2020 and 2022 there was a bunch of regulations and fines put on Alibaba and other companies like Tencent and Meituan, which I think I'm totally butchering the name, basically forced to change their business models as certain regulations and proms put potential fines on these business models. And basically all Chinese internet sectors were subject to stricter regulations around work and just labor and the way they can produce their business. Well, I don't necessarily see this as a bad thing. I think this is a great thing because it's going to mean there's going to be better authorities and better principles put into these businesses, and businesses will adapt. Tencent and Alibaba will adapt. Alibaba is the biggest kind of player in the Chinese internet sector. It's a fantastic company. I actually own an Amazon business and I use Alibaba, and I don't think Alibaba is going anywhere. By 2021 and 2022, the Chinese internet sector was roughly about a $2.5 trillion industry. Now it's about a $1.4 trillion industry, and it still has not fully recovered from 2022. And that is why I'm invested in Clip. It's because I don't believe that the Chinese internet sector has fully recovered, which you could see here by the chart, it has not. And I do believe it will eventually get up to these levels. And I do believe that the biggest kind of holder in this, which is Alibaba, to finish my point, will be totally fine, because I will still be buying from Alibaba as my business still relies on Alibaba to perform. And just because, you know what, I have not seen any significant price changes in Alibaba. They're saying that prices are going to increase for certain products and for certain services in Alibaba. I have not seen that. That has not been the case for me, and I am a business owner who uses Alibaba. So I am invested in the Chinese internet sector. I do believe it's going to be better in the future, and that's why I'm holding on to Clip, and it still pays a great dividend. I do think the long-term price chart history could be better, but that's also due to the fact that KWeb has not fully recovered. I do think if it gets up to levels as high as $40 or $60, Clip is going to be a fantastic investment. But of course, there's not financial advice. Time will tell. Next, I want to talk about TSLA, because in the past month, it's been doing very well. Tesla, same thing, has done very well. TSLA has severely underperformed Tesla in this kind of market here. See, Tesla went up about 30 to 40%, where TSLA maybe went up about, we'll say, about 25% or so. It went from $14.5, we'll say $14.30, to about $17.72, but then paid out a dividend, went down a little bit, and now it's currently sitting at $16.55. So TSLA, it doesn't necessarily perform the best when Tesla has these huge run-ups. It's slow appreciation over time. That is the same for all Yieldmax strategies, and that's why I'm not buying any more TSLA. I'm only buying Yieldmax, which invests in the bulk of Yieldmax. Another company that I mentioned that I might look into is Clip. I already own Clip. QQQY. QQQY, which is the Defiance NASDAQ 100 Enhanced Option Income Strategy ETF. I understand this is not in my portfolio, but it's one that I'll be looking to add to my portfolio, as I do want to have some exposure to the NASDAQ as well, and pays a very high dividend. I do own a small portion of QQQY. I'm down about 25%, but it's been paying me about 50% in dividends. So it's been a great investment for me so far. And yeah, that's pretty much it in terms of my investments. One thing that I might look into is buying a little bit more Zim. Zim has been trending down like crazy from its recent highs. It was at about $23, down to $17, 5% down in the last day, yet freight rates continue to climb higher. So this is one that I'm going to keep my eye on and potentially might put some more money into, or reinvest my CIBC account dividends from there. Because one thing is, even though my accounts roughly stay in the same, I have not reinvested any dividends in my real life portfolio all the way back since April. I'm pretty sure it was. If we can find that here by, yeah, roughly about May, June, and part of July. I've just been collecting dividends. You could see some are small, but some are huge, like we've seen from Clip. We also seen some huge ones from SQY and TSLY. So I have about $300 in dividends. This should really be about a $9,000 portfolio, but I haven't reinvested the dividends yet. So that's one thing that's kind of holding me back. And that's why my portfolio is actually performing a lot better than I would initially anticipate. So this is a portfolio update, what stocks I'm invested in and what I might be looking to add more, and my opinions on each stock. So I hope you guys enjoyed this video. If you did, subscribe. We're up to 5,282 subscribers. I hope you guys enjoyed this video. Please join me for the next one, and I hope to see you guys there. Take it easy.